And we are live, guys. Greetings from Stockholm, Sweden, as usual. And where are you, Rob?
I am vacationing in Texas, but in 2 weeks I'll be back in my hometown, which is Puerto Rico, Guaynabo, Puerto Rico.
So, if any of you have been sleeping under a rock and don't know Rob, he has an amazing YouTube channel called Digital Asset News, where you often deliver, you know, updates in a very digestible format. That's my
Yes,
interpretation. Is that what you're trying to do?
I'm trying to do that. I'm trying to. It's like Steve Jobs said. He says it's easy to make things complex, but it's hard to make things simple. So I try to simplify things as best as possible because there's all these. I mean, we know that in this market, in this sector, things can get out of hand as far as complexity. So I try to break it down, hopefully tell people what they can use to make themselves better investors and make an important decision for themselves, and just go from there. So yeah, that's what I try to do.
Mm. And I thought that today we can talk about some topics that you know a lot better than I. And so, two of them being tax, because you talk a lot about that.
Yeah, because
and
it scares me. That's why.
exactly, it is important. It scares me also, and it is really important. Let's talk about regulation, and let's also talk about your tactics for managing this bear market that
Sure.
could get a lot rougher than it is so far. And but let's start with the tax, because you had a great video yesterday, which was quite specific to U.S. investors, but many of the principles are the same, irrespective of which country you are in. And because there is some proposals on the table in the U.S., and who knows, this might spill over to other countries as well.
I don't. I hopefully for the countries it won't, but I mean, some places like Denmark and New Zealand, it seems like, well, they're already paying, a good amount of taxes. But here in America, first of all, I must apologize if you're not from America. People are like, wow, what does this really mean for me? Well, it means it just like CTO said, it could be spilling over to your area because let's be honest, the global market, they love to tax people. Let's just say it. Countries, they need money, and the best way to do that is to impose their will and tax the living tar out of their residents, which is actually, I think, bad for business. But whatever. So what's going on now? We know that in the grand scheme of things, Jerome Powell, friend of the show, who is raising rates and after the quantitative easing. So what do they do now? They take a look at it and go, well, we put all this money out. Now we need to get this money back in. And they work hand in hand with the government. I know people say, well, the Federal Reserve is not really federal. It's about as Federal Express. But there is a coupling there. I mean, Jerome Powell is anointed by Congress. And so there's a link there. So there's a new proposal that was put out in late 2020, 2021, and it's Joe Biden's tax plan. President Joe Biden. And then, of course, there's been updates and there's been things that have come along the way. When it first came out, it was supposed to be for capital gains tax. And right now, if people don't know, there's long-term and short-term capital gains here in the States. So long-term capital gains, meaning if you keep an asset, crypto, digital asset, a stock, whatever else it is, real estate, if you keep it longer than a year and then you sell it, that is a long-term capital gains tax you're going to pay, which is somewhere around 20, 21%. And then they also tack on a tax depending on which state that you live in. So here in Texas, I don't pay anything. But if you're in California, New York, just add on another 6, 7, 8%. So you're looking at 26, 28%. That's just long-term. Short-term capital gains tax, you're looking at whatever your tax bracket is. So that could be 23, 34, 43, or 47%, or wherever else it is. And that's just if you sell things below 1 year. So, which is, tolerable, I suppose. And what Joe Biden said was, or his cabinet came together with a bill and said, let's do this. Everybody that makes over $100 million, we're going to impose a new tax. And that is that right off the bat, you're going to be paying, whether it's long term or short term, whatever your essential tax bracket is. So that could be, if you're making 100 million, you're in a very high tax bracket. So it could be 34, 46%. Plus you add on the states themselves. So you're looking at around, I mean, you could be at 50% pretty quick, 48.6%, somewhere around there. And that's what it was initially. And then, as politicians like to do, they finagle and they say, well, maybe we should do this and that. So then it came down to 50 million, anything over 50 million. And now it's looking like anything over 1 million, you're going to get taxed for those new capital gains stipulations. So that's what's on the board right now.
They almost double the capital gains tax then.
Yeah, which is pretty slick. But I have to tell you, when I was reading this bill, I mean, CTO, we know that the art of negotiation always starts high, right?
Yeah.
So like, hey, I want a 24 karat gold toilet seat. Okay, well, we're gonna give you wipies. Okay. Well, how about this? Let's just bring it down. Just give me the handle gold. Okay, we're gonna give you wipies and a spray bottle. All right. How about this? Let's just do a toilet. Just go from there. And that's essentially what it's going to be. So it's going to be like they do the very highest, they're going to bring it down. But really at the end of the day, what it comes down to is they're going to raise taxes. They're going to raise taxes here, they're going to raise taxes. And then, of course, other countries and other politicians like, that's a pretty good tactic. Let's do that. That's my theory anyhow.
Exactly. And it started with something that will only concern the billionaires, right? And then you bring it down until it actually starts concerning a lot of people here in our audience, and if that goes through. And of course, a doubling of the capital gains tax can have a huge impact on your strategy and what makes sense and what doesn't. But that really comes to the second part of that video which you posted yesterday, which you all should go and watch, where you talked about there are some solutions also.
There are some solutions. Well, there's a couple of solutions. First of all, you can just move. You can say, you know what, I'm not going to do this. To hell with you guys, and then off you go. So like me personally, like I moved to Puerto Rico, and then because there's no capital gains there, and then people will also talk about, oh, you moved to Dubai and things like that. And there's different stipulations, especially if you're an American citizen, because of giving up your citizenship. If you want to do that route, that's not me. Yeah. But Puerto Rico is part of the United States, so that's why I went there. However, you will never get away from taxes. Let me be very clear on that. So like over in Puerto Rico, first of all, super expensive to live. Right now, there's rolling outages. You're still going to have to pay a good $10,000 into charity organization. You're still going to have to pay federal taxes for your business. You're never going to escape that. And also for your property taxes, you're never going to escape that either. So don't think like I'm going to go there and that's it. So you can move. There's that possibility. In America, we have IRAs. So what you can do, and this is what Peter Thiel actually did in the late 90s, early 2000s. So Peter Thiel, legendary investor, PayPal co-founder. And what he did was he put those shares of PayPal into a Roth IRA, which there is pre-tax and there is post-tax. This is post-tax. So he put those shares of PayPal into Roth when it was worth absolutely like nothing, pennies, fractions of pennies. And as it accumulated, and now I don't know what the stock price of PayPal is, but you're looking at millions and millions of shares. That's worth over $5 billion. And he's going to pay exactly, let me move this around. He's going to pay, there we go. Sorry, there's light off my.
It looks nice. It's a nice cinematic effect. So just it makes us a little bit jealous though, because here it's cold and dark outside. Here, the sun is glimmering in the pool, but
So sorry. Yeah. So yeah, he's for $5 billion. You know how much he pays in capital gains tax? 0.0% at the age of 59 and a half years old. So there are three types of IRAs. There is traditional, a SEP, and a Roth. And I did a video on three differences and what might be best for individuals. Some people have businesses and they want to do a SEP. Maybe they want to do a traditional. I personally do a Roth. It's post-tax, and I use iTrust Capital because I'm able to buy crypto, Bitcoin, Ethereum, Cardano, Chainlink. I mean, all the ones that you really want to deal with. I put them in there. Also, you can buy gold and silver. I can put them in there. And then what's great about that is that there's two things. First of all, at 59 and a half, I take it out. I'm not paying any capital gains tax. Second of all, if we see a calamity coming forth, like we've seen, recently, you can sell your crypto within your Roth IRA account, stick it into cash, and wait for the eventual crash, and then buy back your crypto. And guess how much you're paying in capital gains? Zero.
Zero. Yeah.
So that's why I went with iTrust. And then just as a disclaimer, I just want everybody to know I'm super biased with iTrust because I use iTrust. So if people are like, well, why do you recommend that and not something else? Because that's the one I use. And that's pretty much how my old channel works.
Exactly. And so I think that the big takeaway, and this was in the US, in our small country in the tiny corner of the world called Sweden, we have something, we have very similar constructions. And there is also something called the ISK. It's like a Swedish word, but it basically means that you can put stuff into a special account, and as long as you have the money in that account, you can do whatever you like. You can buy or sell Apple stocks, or you can move it into some fund or bond, or you can buy Bitcoin like an ETP, almost like an ETF, but something similar to an ETF, where you track it's a price tracking certificate. So you track the price, which has some disadvantages. There's a counterparty risk, and it's closed on weekend and so on. But there are still possibilities where if you stay in that construction, instead of paying capital gains tax, you pay a small percentage of the total amount that you have in that construction, which for very, low volatility assets, that's probably not a good idea. But for something that's very volatile, that can turn out very favorable. So typically like tech stocks or crypto exposure or something like that, that can be a much smarter way to do that. And I think the big takeaway that I want everyone to take from here is that there are usually many different constructions. We also have something it's called capital insurance, which is more similar, I think, to your IRA and so on. So there are, in most countries, different types of tax constructions. And I think that many who come into crypto from a traditional background, they know this already. So we don't need to educate them. But many have also come into this much more from a technology angle. And I think the first reaction from people is that I'll just ignore the problem. And that's not a good idea, guys. I'm telling you, that's not a good idea. Don't do that. Do not underestimate the tax authorities. They're going to dig it up. They're going to find you. And I don't know in other countries, but at least in Sweden, the threshold when it becomes like a serious crime where you could realistically actually go to jail, it's very low. It's much lower than you would expect. So don't do that. The second instant reaction is that I just move to another country. But in most cases, that's not enough. You're still liable where you came from, unless you have taken much more extensive measures to which is different from case by case. But you need usually to do more than just move. Moving isn't enough. And then I think the third step, which people actually should arrive to, is to realize that there are perhaps solutions, but you need to get in detail. You need to get an actual professional who can go into your specific case and help you do a smarter tax planning, perhaps, which within the framework of what is permitted in your jurisdiction. But I think many people haven't realized that it's possible, and instead they feel paralyzed. They feel that I cannot sell because then I incur capital gains tax, and then I incur tax, and then instead they ride it all the way down from the top all the way down to the bottom, but no one's going to come and thank you for losing money, right? You still need to manage your house and protect the capital. And I see now in this downturn that's happening is that unfortunately people have gotten paralyzed because of the worry of the tax, and they didn't take action when they maybe should have to protect the capital. And I think that is very important at this time of the
Yeah.
market. So thanks a lot for, yeah, sorry.
Oh, there's one more thing. Well, there's two more things. There's another strategy people can try, and this is a little bit more for the richer people. We talked about this initially before we came on. Buy, borrow. It's called buy, borrow, die. If you do a search right now for buy, borrow, die, you will see a lot of different things pop up on Google. And what that really comes down to is there are rules for thee and there are rules for me. And when you're super rich, you can do stuff like this. And I think this is kind of like one of the things that MicroStrategy might be doing. And I think there's a big difference between us and Michael Saylor, the billionaires out there. However, it is something to take a look at. So buy, borrow, die works like this. You buy a stock, an asset, a real estate, a crypto, a digital asset, whatever else it is. And you buy on that, and of course, then you borrow against it. And of course, you can borrow against it. You have to make sure that you can cover the margin calls, and you are a little bit constrained. But you can do a lot of things, especially if you bought a ton of it. Then what you do is you can put it into a trust, because you put it into a trust, and then it can go to your kids. And then when you do those types of things, because borrowing against your assets is not a taxable event. So then when you have this and you just keep borrowing and borrowing, then you pay back. And then there's like a death tax, which you can pretty much skip over because you put everything in a trust. So essentially you're buying, you're borrowing against it, you're using that money to put into appreciating assets, whatever those are, and you just die. And then of course, everything that's in your trust goes to your kids, goes to your estate and everything else, because your trust and your estate is something different. Again, this is an advanced strategy. That is just like what you said, Larson, to go and talk to a tax professional. But there is a big difference between us and a lot of the mega rich that's out there. But it is one of those options that you can look at and go, well, I can do a trust, and you can. It just takes a little bit of money to set up. So, and when people talk about, well, I'm going to do it this way, this billionaire way, there is a big difference, again, from what I will do to what Michael Saylor will do and everything else. Trust me, I have borrowed against crypto, and it's worked out okay because I didn't borrow against my crypto and buy more crypto as it goes down. I borrowed against my crypto to pay for an asset, which was my house in Puerto Rico. That money went into the house as the margin calls came out. And then I've already talked about this at length. I was actually in Europe at the Guy's Coin Bureau's event. And I missed a margin call because I was traveling from the UK to France to Spain. I missed a margin call. They liquidated me. So that is a event. And but fortunately for me, the cash that I had went into an asset that is really appreciating, which is the real estate. Which is what we're also using for short-term rentals. So it worked out okay. So when people say, well, I'm going to borrow against it, you can do that. You can borrow against your crypto, but you better make sure that if you're borrowing against, because I did it when Ethereum was 4,000. So now you got to cover it as the margin call comes in, depending on what you do. So just be careful out there, everybody. If you're listening to the sailors of the world, go, I'm going to borrow against it. Maybe this might not be a bad time because we're in the bear market.
Exactly. Oh, that's very insightful, actually. And I mean, the times that we have now, and maybe ahead of us for some time with this bear market, it really is an opportunity to try to consolidate your setup, improve the setup, and prepare for the next market. And a lot of people here have made a lot of money. So maybe a lot of these things didn't make sense before. It was too much effort for too little gain, but maybe now it is. And then if preparing the setup, you are prepared for the next bull run and avoid getting paralyzed because you feel you can't do anything, I'm locked up, I cannot maneuver because I'm not sure of what will happen with the tax and so on. Now is the time to sort all that out and be prepared and ready for the next run, because the only thing we can be sure about is that the swings of the market up and down is like the waves in the ocean. They're not going anywhere, guys. There's going to be more crashes, more crazy bull run, more crashes, and it's going to repeat while the markets exist.
Yeah, but you know what? But Larson, like the people that are watching your channel right now, these are the people that get it. So like you watching this video right now, you're not And I say this on my channel, you're not a tourist anymore. Like if
No.
you're here, and this is the bearish of the most bearish markets, and we could probably go down lower, let's be honest.
Mm.
But if you're here right now, you're not a Dogecoin millionaire. You're not a get rich quicker. You're probably
Yeah.
one of those people that likes to plan, to plot, to be a little bit more light footed as you move forward. So I think these people right now are the ones that are going to make it. It's just
Yeah.
going to take some time.
Absolutely. And I mean, look at Rob here. It's possible to take action and actually take this time to rethink what should the setup be, what should your location be, maybe, and get
Yeah.
ready and come out running for the next period. And the second, when we come into that area, what should the location be? You have Texas and Puerto Rico as your base. A
Mm-hmm.
lot of people are looking at other locations. Then we come into regulation, and regulation might become different. It might change over the coming year or few years, and it might
Right.
either it consolidates, becomes more similar, or it diverges. What do you see from all the people you meet and all the conversations, everything you read? What do you see the world is going to in terms of regulation? Are we, cracking down and killing crypto, or will it? What will happen?
It's a strange time. So like I've met some interesting people in Puerto Rico, and a lot of the crypto OGs have moved there.
Yeah,
And there's some people that you'll never know about. You'll never see them on social media, but they're the ones that are doing a lot of things behind the scenes with different organizations and different projects that do a lot of the moving. But as far as like the regulation, they're all in the same mindset. And maybe this is a group think where they're like, we're going to go forward. It's going to be okay at some point, but we're just going to move forward. And that's how it's going to be. It's a weird thing. I've always maintained this one thought, which is the government, especially the US government, they don't want us to save our money and stick it in a bank account. They want us to spend that money so they can, of course, we can invest into it, and they can tax the living tar out of us for capital gains, because they don't do anything if it just sits in the bank. However, if you invest into something, they're like, oh, well, great, you did that. And we know what you did because there's KYC and AML, and we're hooked into all the exchanges, so we're going to tax you. So that's my first part. But it's amazing, like there are great bills that are coming out, like from Senator Lummis from Wyoming, the Responsible Financial Innovation Act. And if that can get through, because it takes a look at, okay, this is what the CFTC and this is what the SEC jurisdiction is going to be. This is what stablecoin regulation. This is how the banks are going to work. This is how integrity coordination. Everything that we need to, not everything, but most things we needed to get clarity. I think if we have something like that, I know people in crypto hate regulation, but this is a very unpopular opinion. But I think if we can just get some clarity, we can get those big time money people, the institutions that are sitting on the sidelines with going, where do I put my money? If they can get some clarity, they can say, okay, we have protection. Because to them, for the big money, it's not about how much they make, it's how much they keep. They're
yeah,
about wealth preservation. So if we can get this regulation come through, then it's good. On the flip side, you've got Gary Gensler, who's like, look, everything is going to be a security. And there's only one commodity out there, Bitcoin, and that's barely if he goes that way. So, and then of course he is doing regulation or enforcement through regulation. He needs a little bit more clarity too. But until that time, I don't think people are really going to, especially the institutions. There's a little building behind, but to really come in, we need that force.
yeah,
But the last thing I will say is this: in my state of Texas, we've got a couple of senators, one of those being Ted Cruz, and he is a big proponent of Bitcoin and Bitcoin mining because guess what? It's job creation, and that's great for politicians. Second of all, it's revenue generation, and that's great for politicians. And then as they're going to run, because we have midterms coming up first week of November, their constituents want to hear that, and they want to hear the opposite for the opposite side. So I think if they get on the right side of this and go, this is why Bitcoin and crypto is actually good, because all these things we just talked about, I think it'll move forward. But
mm,
that's just my opinion.
yeah. And I mean, now in EU, it seems like a lot of the craziness from a couple of months ago seems to have been moderated, and this MiCA regulations looking better.
That scared
And
me. Yeah.
so I mean, clearly, it's like you said, the negotiation. You start with, I want toilet seat in gold, and you know that you might get
You get
a
the white piece. That's
discount
it.
on a basic white one instead. But you kind of start in one direction, and then you know that you try to kind of come in. You try to move the needle a little bit, maybe with that kind of negotiation. But so that's, I think there are positive signs that there are actually politicians who do see the opportunity for growth, and I hope that it comes that way. But there are still issues with it, like for example, these provisions that wallets, like wallet addresses, should still
Right.
be stored in a database connected to name and so on, which is fine in itself, but they haven't thought about that is going to leak. Some underpaid clerk is going to leak it for money, and then suddenly that's on the black market, and people can sort to go figure out who to go rob, and not the name, but actually burglary. They can break in and say, "Yeah, but we can see that you have this much money in your wallet right now, and you better
Yep.
give it to us." And it's so ideas which are, I'm sure it's well meant, but it's creating crime instead of preventing crime. So I think there's an immaturity that is still there,
Hmm.
but at least that's been movements in the right direction. And as one my friend says, that a political decision is valid until the next decision. Maybe that's how we have to see it. That if the rules come out wrong, it doesn't mean they need to be like that forever. There can come another decision after and correct some of it. So, but for sure, this is very interesting, and different parts of the world are definitely going in different directions. EU is on one track now, the US is on a second track, and then there are countries like Dubai, for example,
Yeah.
where I spoke to a friend of mine who had just been there, and they've taken a different path. They have identified that, okay, before we had oil that's running out, so then they moved into financial markets, and then they
Hmm.
quite early identified that blockchain and crypto market is a big booming industry, and they decided they want to position there. They want to attract competence and capital, and they've been very successful with that. And then
Yeah.
trying to create a different, more supportive regulatory environment there. And they're not some small country. They're a small country, but they have a lot of strength also, so they can probably do it, I suppose. And that so I mean, we might see different tracks in the world. What do you think? Or do you think it will harmonize in them?
Well, I mean, just take a look at the countries that embrace innovation. So, industrial revolution, what happened? America pretty much, took that from the agricultural revolution, industrial
Yeah,
revolution. Then we work into computer revolution, and of course, the countries that embrace those innovation, they are the ones that became the next world leaders. And
yeah,
of course, now of course we can talk about the war economics of what happened, but it worked out pretty well. I think the next ones to actually embrace it will be, of course, I still think it's, I mean, of course, crypto and digital assets, but I think that, and if we take a look at commerce, and then of course artificial intelligence, the
yeah.
ones that embrace those areas and the ones that dominate will be the next world power.
Oh,
I know
absolutely.
we so and but it's seeing that vision and going, oh, the governments can't say, oh, well, we're losing so much power. If the governments thought they're going to lose so much power, they would have shut down the internet. And of
Yeah,
course, what would have happened then? It wouldn't have flourished. Then we wouldn't be in this position we're at right now. So, yes, if they can do it, but the thing is, will they? Will they do it? The people, it's just like a balloon. You let a little air out on one side, the other side will get filled up. So if America says we're banning it, guess what?
yeah,
Well, let's go to the EU and Dubai and those different areas, and they'll dominate. And then
yeah.
we'll just be left behind. So it just depends on which ones are smart enough to figure it out.
I had a boss one time who said that it takes much stronger leadership to say yes to something than it takes to say no. Say no is very easy. It's like, yeah, this seems bad and worrying, and we don't know, so we just say no. Anyone can do that. But to say yes to something takes much more. You need to fully understand it, so you know what you're letting in. You need to have an outlook into the future, and you need to, when you say yes to something, you put your rear on the line a little bit. You
Yeah. Oh
you
yeah.
risk something. You say yes to something, and then hopefully you've understood it. But if it turns out wrong, there can be consequences and so on. So it takes much more to say yes to something. And I think what we see now from a lot of the politicians is that, but this seems risky. We don't really understand it, so we're cracking down, we're restricting, we're enforcing, and so on.
Sure. Yeah.
While it
Sure.
takes a much stronger leader to say that, but all those things are true, but the advantages in innovation, job creation, and so on still overweigh. So we will be supportive. We will create supportive regulation around this, which was the case around the internet, and especially in the US, Silicon Valley, and so on, did better than, for example, EU in creating that kind of regulation. But as I saw it, at least from during that time and what I saw here in Sweden, it was very few people. It was very few people who stood up, but they were strong. So they pushed it through. Like here in Sweden, we had a prime minister at the time. His name was Carl Bildt, and I think he was the first head of state to send an email to another head of state, which was actually the U.S. president at that time. And this was early 1990s, I think. And so there was like a few people who decided that, yeah, we will be supportive of this technology despite all the risks, despite all the problems, and despite that we don't fully understand where it will go, but we think it will be overall beneficial, so we create a supportive regulation around it. And I think we haven't, here in Europe, we haven't really seen those people so much, while in the US you have some individuals who have really put their ass on the line and said that I believe this, I support this, and I stand by it, and I think it's a good thing. Even though, like all technology, it can be used for criminal activities also, like the wheel, like the car, like the internet, like the mobile phone, and so on. But that doesn't mean that we should ban them and crack down on them, because overall it's still a good thing. We have to find a way where we can support innovation, support new technology, and prevent the crime. And so far that has been generally possible to do. And I'm certain that it's possible with the blockchain as well.
It's all possible, but you have to also look behind the scenes and go, okay, well, for all the different politicians that are out there, where's the big money coming from? And usually it's the banks. And of course, I have to say that if the banks are looking at this from the outside looking in, they're like, this isn't good for us. I don't think we like this. This is great for innovation, but not for us. So there may be a little bit of whispering in the ear of going, we don't want this to go through. This can't go through. I think if you didn't have that, I think we'd be a little bit farther along. But that's just hearsay. Maybe I'm wrong. Maybe the bank's like, we should really get crypto in there, and maybe they're doing those things, but I doubt it.
But I think it's maybe a mix. I mean, for sure, there are commercial banks who see the potential for business development and so on. And here maybe regulation can really help, like you said in the previous video, that if there can be a clarity in regulation, perhaps we will see much more institutional players daring to step in, because they're a little uncertain. They're not sure what's the rules, and that's a risk.
And it brings up a good point. If banks were smart enough to look at it and go, okay, what do customers want? Well, they don't want any kind of friction. They don't want any bottlenecks. And then also looks like there's actually a demand for crypto digital assets. Maybe because like NYDIG works with this. It's a company out of New York, and it works with smaller banks. If they just said, hey, here's what we're going to do. And I think that's what's kind of going on in the background. We're going to allow you guys to offer crypto to your customers. It's going to take a little bit of time. But of course, the exchange rate, you can actually make money off of that. So even if you look at all the banks that are in the physical locations are shutting down because the revenue is decreasing, and it's going to these bigger banks. If they look at the smaller ones, go, look, do you guys want a revenue generating type of business? How about if we offer crypto and digital assets, instead of them using these exchanges, they use you guys, and you guys custody it, because that's what you're supposed to do in this new digital age. maybe it'd be better boom for them. So the bigger banks are like, maybe in some way, but the smaller banks, they all band together and go, maybe we could do a
Yeah,
little bit of revenue generation that way.
exactly.
Nah,
So let's let's take some questions and start moving into the more market side of things. And
yeah,
guys,
the
you can
market.
write questions on the in the chat. So we have from Joe here. Do you think we could see a winter dip just like after the 2017-2018 bull run? And I know you have some insights here, at least about from the US, about the midterm elections, how it often looks.
Yeah, so there's a if you if you do a Google search how midterm elections affect the stock market, there's going to be a graph that comes up, and it looks almost like a spreadsheet, and you can see from 62, from Kennedy all the way to 2018 Donald Trump. You can take a look at what the midterm is. The midterm stock price up to that point is usually, not all the time, but usually in like a little bit of a negative or a decline. But if you take a look at 3 months
Up
after,
until the
up
midterm
until
election. Yeah.
the midterm, and then between like November to January, so like our midterms are the first week of November, Super Tuesday. Everybody votes. 3 months after that, you're usually looking at a positive in almost all cases. Not all cases, but the majority, I'd say 90%. And if you take a look at 3 months and then 6 months out, usually there's even a bigger increase. Like I can just tell you, like I'm looking at it right now. So in 62, John F. Kennedy, it was negative 17% for the stock market. S&P 500, everything was down. 3 months after, it was up 17%. 6 months after, it was 23%. And 12 months after, it was 30% up. Lyndon Johnson, negative 13 to plus 17. Nixon, negative 31, which was this is back in the 70s, remember? When we were having that economic crash, essentially. Negative 31 to 20%. Even 78 with Jimmy Carter, negative 0.9 to positive 9.3%. And then the average is midterm average is around 0.3%. Then positive 7, positive 15, positive 16. But this is, and we always want to think that things are different, but sometimes it's not so much different. So do I see like in the next 3 months we could have a rally? We could have a bear market rally, but I don't see from this point that we start to see the crypto market really take off like a rocket. And I got to tell you, between us and the 1,000 people that are here, I'm hoping it really doesn't take off too much, because I'm kind of hoping, and again, I'm biased, I'm hoping for the next year, 18 months or so, are just pretty much sideways or like a little bit of a decline. I mean, of course, there's always bear rallies, but so I can accumulate just like what I did in 2018 and 2019 to where things work out in 2020, 2021, 2022.
I hope so too.
Yeah.
I,
Yeah.
I, I hope
And
we get even deeper crashes so we can buy even lower. But let's see. Let's move on here. Chuck asked about iTrust specifically. Can
yeah,
that turn into a Celsius? Like it's gone. Suddenly it's gone.
that's a great question. And there was a time, there was a lag for Celsius, for iTrust website, and it was down for about 12 hours, 18 hours, or something like that. And then so we said, okay, great. Now it's going to be another Celsius, another Voyager, and everything just kind of goes down. They said, no, we had corrections. We already put things out that said that we're going to be an upgrade, and they did. So the reason we had to take a look at what causes insolvency, what happened with Voyager and Celsius. Well, with Voyager, we know that they did loans, and one big loan was Three Arrows Capital, $640 million, and that's not getting paid back, and that became insolvent. And then with Celsius, there was a lot of different loans and issues that were going on around there, and a lot of risky behavior, because they were taking our assets, and they were using our assets to buy other things and to do loans and do all these different very risky plays, farming and stuff like that. So that is Voyager and Celsius. Now we have to take a look at the economic factors of iTrust. Where do they make their money? So the first thing is, it used to be $29 a month, which I was like, that's not so bad. And that's when I got into it almost 2 years ago. I paid $30 a month. I was like, not bad, because I don't want to deal with the paperwork and stuff.
Yeah.
Then they got away with that. So there's no monthly fees. So I was like, well, how the heck are these guys going to make money? You know how they make money? 1% transaction fee for all your trades. So if you're
Mm.
going to buy crypto, it's 1%. If you're going to sell your crypto and put it into cash, it's 1%. Everything is 1% along the board, but they don't take our assets, and it's in the terms and conditions, unlike with Celsius, where they say your assets are your assets.
Mm.
We actually have custody in, which is Coinbase custody and Fireblocks. Coinbase custody is the same one with Michael Saylor and MicroStrategy that they use. And then, of course, they don't do loans and yield farming and all the crazy stuff that was
Yeah.
offered. And so the other one. So that's the thing you have to take a look at. Where is the revenue generation, and how are they doing business? So, and of course, having said all that, does that mean that anything can go to zero? Hey, Bitcoin go to zero? I don't know. It's a crazy market. I don't personally think so, but it's like something I had to always say.
Anything can happen. Here
Anything
was
can
a
happen.
comment, Patriot 77, about regulation. I think that people that are hoping for full decentralization are a bit delusional. At this point, we need some level of regulation, but not unnecessary regulation. And I highlighted this because I agree 100%. Because what is happening now, for example, to many people here in this small country of Sweden, is that the commercial banks are so uncertain what to do. So, some high school teacher want to buy Bitcoin for $1,000, and they close his account that he has had with the bank for 41 years, and it's crazy but the bank don't know what to do. They're thinking, oh, maybe we've heard about Bitcoin, and it's probably some money laundering going on by this
Yeah.
64-year-old high school teacher for $1,000. Probably not, I would think, but it's like the unclarity creates that each individual bank clerk instead try to take their own opinion and decision, and it becomes very arbitrary then for everyday people. And I think some level of regulation is going to improve a lot of these things. It's going to be clear what are the rules and what are they not. And
True.
I think that high school teacher should be allowed to spend $1,000 on speculation if he wants to do that.
Well, I don't know what it's like in Sweden, but I used to live in this little city called Las Vegas, and nobody said anything about all the gambling that you could do. You could go there and go, you know what? Here's little Johnny's college fund. I'm going to put it all on 18 black.
Oh,
All
absolutely.
my money's gone. So, like, essentially, if we allow gambling like that, which is really degenerate gambling, why couldn't we involve into speculation? It seems like there's a little bit of a disconnect there.
Exactly. At least here is because one of them immediately generates income for the state, and then you can even advertise for it. So come here and gamble, guys. It's great, and
That's a
then people do that.
Larson, that's a great point right there.
Yeah,
Like I forgot about that. Yes, of course, gambling. That's why there's no state taxes in Nevada because they get it all from the casinos. So
exactly.
if different states go, well, okay, well, for capital gains, we're going to tack on this, and this is for crypto and digital assets. Let's just let them do that, and then they can get their funding from there. I don't know.
Exactly.
Makes
Here
sense
we
to me.
have Gandalf Grey on the topic of Michael Saylor's buy and borrow against. How
Mhm.
is it that he buys at a very high average but gets such a low margin level? Is that something you can determine yourself? Yeah, because he has been buying at high average prices. How does he survive them now?
I think, well, how does he survive? Well, first of all, you have to understand that there's different levels, and Michael Saylor and me are on the same level. So there is different ways that they can raise funding. They can raise debt through their company and their corporation. They can move a lot of funds around, and they're okay. And I think the margin calls that he was talking about before, some people said it was like 15,000, but he came out and said no, it's around 30, like between $3,500 and $200 or something like
Yeah.
that for his margin call, which is extremely low.
Mm.
So you have to understand that the way that he looks at things and the way that we look at things are a little bit different. And of
Yeah.
course, he can create funding from debt from his company,
Mm.
and they can do a lot of different things that we cannot do. So, but why do they have that high average? Well, they have a high conviction that's going to keep going up.
Yeah.
So, and he's just like, this is it. I'm riding that train forever.
Exactly. Um, So can I? Let's see here. I can't see the comment anymore. I read it out instead. Rob, can I borrow? Is it possible to borrow off the iTrust account for
No.
no shoes?
So, well, let me say that again. So with IRAs, I'm not 100% sure. But with 401ks, I have borrowed against my 401k before to start a new business.
Mm,
And that is legal in the United States. However, there are very strong stipulations that you have to do. There is documentation that you have to sign, and you
mm,
have to actually pay that back at a percentage. So, but that is a 401k as opposed to an IRA. So there may be something that, but I personally am not going to borrow against my 401 or my Roth IRA right now to do other things. I've got other businesses I can do for that. So
yeah,
talk with your tax professional on that one.
exactly. And to highlight one more, to really drill what you just said home, um, Pancakes here asked about what about $1 million loss? We talked about the $1 million gain for capital gains tax. And one thing that many people don't know, in some jurisdiction, including Sweden, if you own physical Bitcoin, for example, physical crypto, and you make some loss-making trades, some loss-making trades and some profit-making trades, you cannot offset them fully. So
Yeah.
if you made one, even in the same year, on the same coin. So if you made a $1,000 profit on one trade, and then you do $1,000 loss on the next trade in the same year on the same coin, you cannot offset them against each other fully. So that comes as a shock to many people because they feel that maybe they put in $10,000 and they traded and then they took out $11,000. So they made $1,000 profit or something. But that's not enough. You have to keep track of every individual trade, at least here in Sweden. So that is, it's more complicated than many people realize. And it's important to
Yes.
take that, take it seriously.
Mm.
So deduct loss from tax owed you can, but and in the US you have some rules and regulations around that. So I just mean that we can't solve it on the call for every single case, but it is definitely important to take this seriously and really go seek out. This is where you need the professionals. This is, you need an actual tax advisor that can look into your specific situation.
Yeah, and you know what? I work with a company called Coin Ledger. It used to be called Crypto Trader,
Mm.
and it's an integration for tax services. And it takes your cost basis and all your trades and everything else, and it spits out a report that you can send your CPA, so they can say, oh, this is all the profits and loss that I have across a continuum. And they use all the exchanges. They can use your MetaMask wallet also for NFTs and all that crazy stuff that you
Yeah,
guys gamble on.
yeah.
So I'm going to talk about this today, but in the United States, we had an extension. I think it's till October 17th or 18th, and they're going to do an AMA with tax professionals. So I'll
Mm.
talk about it today on the channel, and maybe that could help you guys out.
Yeah. So, and let's talk a few more minutes on the bear market psychology. We touched on it already. Like the people who are here sticking around, it's looking much better than for most people because most people are already gone. Most people from last October, November, they are no longer here. They are out doing other things. And they will not be back until the next bull run has already happened, or mostly already happened, and that I see as the biggest mistake. How do you stay motivated? How do you stay focused on this?
I'll be honest with you. You know, in 2017, when everything was going up and I thought I was a genius, then 2018 as it crashed, I left for about a month or so. Sometimes I think I would come in and out because I was like, this is, damn, I can't believe all this thing went down because I didn't understand the basic principles behind what crypto was. When I first got in, it was just numbers go up. That sounds good. I'll invest into that. And then as time went on, I'm like, oh, okay, this is why it could actually flourish and actually do well. Oh, this is what I maybe instead of dropping lump sums, doing dollar cost average. Oh, so it's time in the market more important than timing the market. Okay, okay. So in the beginning, in 2018, I was pretty frustrated as well. And then, you know what really frustrated me? When people on YouTube were like, hey, it's okay. I hope this market goes down even more because I
Yeah.
want to buy. And I'm like,
Yeah.
who the hell is this guy? I can't believe he's talking like that. My portfolio is down like super, I mean, majorly. And it would really tick me off. But then I realized, oh, that's okay. I get it. Okay. It's just going to take a little bit more time. So I know the mentality right here is a lot of people from 2021 are gone. But I think the ones like, just like how we stuck around during the tough times, the
Mm.
people stick around now and they learn about the different projects, why Bitcoin is going to do very well, why Ethereum could do very well, why the chain links and the Cardanos and the Avalanches could do potentially well, and how to diversify, and then how to not invest more than they can afford to lose, how to never trust anybody, how to never leave things on exchanges, how to take profits along the way. And they learn these basic principles. Then as time goes on, they're like, oh, okay, so I get it. It's just going to take time, and I'm not going to be a millionaire overnight. And I
Yeah.
think that's the bigger thing.
Yeah. I feel so too. This is really the time to consolidate, manage your setup, your tax setup, your location, your strategy. Be prepared, and we don't know when it will turn around, but it will turn around. Nothing goes up forever, but nothing goes down forever either. There will come another cycle, and the objective is to get jump on it, be on the train when it starts riding again.
Yeah, and I
And
will say this. Oh,
yeah,
sorry. Go ahead.
no, no, please go ahead. Yeah,
No, I was going to say, like, I mean, nothing goes down forever, nothing goes up forever. But that's why it's so important to, like, right now in the bear market, I call it a build a bear, because everything gets built here, and that could be the projects, that could be your mental outlook, that could be your portfolio. But you have to remember this: even though we talk about how things will go up, there are some products that are not coming back,
oh
and I
yeah,
think people have to realize that. And I always say this example: a dash of salt. So if you look at the crypto dash, I mean, it peaked in 2017, and there was a little bit of a peak in 2021, but you're still underwater for the most of the time. And then also Salt, which was a lending platform, which was supposed to be the next big thing, that peaked in 2017 over $1, and now you're looking at pennies right now, and it's just flat line, like you just had a heart attack. So remember that this is the time when you can do all your research and figure out what is the best option for me and the crypto projects, because we talk about some things don't go down forever and go up forever, but there's some products that are not coming back. And it's important that people realize that maybe I shouldn't be so much of a gambler and get a little bit more safer. Not financial advice, just the things that I've
absolutely.
done.
I think many people discovered in the previous bear market, as many will discover now, just because an altcoin has gone down 80-90% doesn't mean that it's cheap and it's a good buy. It can still go down another 90% or another 99% from there. We have to take a super
Yeah.
chat here from Andrew. I still don't know how I have this feature on, but we have gotten a super chat from Andrew. What happened to Dan teaches real estate? Are you still?
Oh yeah. So the thing is, I was talking about, because me and my wife, we do a lot more things in real estate, and we like long-term rentals, short-term rentals, apartments, and just basic single-family homes. And I was asking the question, does people want to learn about that? Dan teaches real estate, and people are like, yes, we'd like to learn about that. Unfortunately, as time has gone on, I realized just how busy I get, and like we just got done. We do a biannual obstacle course for kids, the charity event. So where I have to be there, and I do the construction with the guys, I do the marketing, I do the running of it, and we just got done with it. It just takes a long time, and all the proceeds go to the El Paso Boys and Girls Club. So like that took time, and then of course the Dan Teaches Crypto website takes time, and then the website takes time, and the Amazon business takes time, and then the sports facility takes. So like all these things take time, and maybe I bit off more than I can chew. At some point, maybe if I just get someone to like help me to do it, then I'll put it out there. But it just takes so much time to do things. You know how that goes, CTO.
You have to be a little bit optimistic, otherwise you never start anything. So that's absolutely clear.
Yeah.
Nauseous, CTO when new office. I have gotten the keys yesterday, so I have a second office now. I'm gonna
Ooh,
move
nice.
stuff in there as soon as possible because there is this gigantic renovation going on outside. But we asked them to pause while we're having this video call. But I can only do that so many times. So I have solved that. Very happy for
So,
that. Speaking of real estate.
hmm.
So um, I know that you have a busy day today. You're gonna have another call with
with
another
yeah, with
YouTuber.
Guy from Coin Bureau. I'm supposed to be on his podcast. I think we're going to talk about some other different things. But yeah, at some point I got to get over there, so we're okay. We got a
Send
couple
him our
minutes.
regards from Sweden and from the channel. And thank you so much, Rob, for being on.
Thank you.
Always, it's always great listening to you. You always learn something, and you always feel. I feel calm. I feel calm and peaceful and a zen listening to you. I really am a huge fan. And let's talk soon again.
Thanks. Sounds good. I appreciate it. Thanks everybody for tuning in. Adios.
Thank you, tack. You have to say thank you, tack. Tack is
Thank you, Tuck.
Swedish for
Thank you,
thank you.
Tuck. Bye.